Austerity or growth, which is the best way to overcome the crisis? Cuts make matters worse and could aggravate economic contraction, says the growth camp. Cutting spending is vital to make public finances sustainable and restore market confidence, says the austerity camp. Okay, at least both sides agree that structural economic reforms are needed to boost potential growth by removing barriers in Europe's single market. So, growth or austerity is the question that simple. This is our topic today, so let me present you my guest first. I'll start with Dimitrios Droutsas. You're a Greek member of the European Parliament. You are a former foreign minister of Greece, is that right?
This is right.
Okay. On the other side, German MEP with a Greek name again, Yorgo Chatzimarkakis. You're a member of the Alliance of the Liberals and Democrats at the European Parliament. To on my left again, Marisa Matias, Portuguese member of the European Parliament, of the European United Left. And on my right side again, Mr. Eric de Colonel, you're professor at the Solvay Brussels Business School of Economics and Management. So first question to all of you, it's a little survey with 3 questions. Who's in favor of austerity at this table? Anybody?
Well, to a certain extent, you need, of course, fiscal discipline. It's another name for it. So fiscal discipline, yes.
Okay, so we've got at least one clearly, but fiscal discipline. So let's go on growth, just to say.
Okay. Yes, of course. I just think it is incompatible with austerity, but that's another
3, even 4. And if we say just growth and austerity together, is this possible? Is this feasible?
It is. I think yes.
It is. Okay. So if we go it is not. Okay, so why? Let's start with this question.
Why is it not possible? Because I think the facts just show us how it is not possible. If you see all the projections about growth in an austerity period, what they show is that we are entering into the domain of recession again at European level. Is not that austerity is promoting growth or so ever. So the facts and reality to show to us that all the projections about growth have been revised in a lower degree, and all the projections about deficit debt have been revised in a higher degree.
Okay, I'd like to ask Professor Koner, if you see this, is there a real solution? Is there a recipe, you would say?
Yes, I think there is, because if you look in the past, instead of trying to look into the future, if you look into the past, you see that over the last years, and particularly over the last months, one problem is being solved, namely the deficit of the trade deficit of most problem countries. Their trade deficit is reduced, and they even go into a surplus because their domestic consumption diminishes, of course, but also because their exports increase. And I think that is a precondition for finding again a good basis for future growth. So I think we do need this period of austerity. Nobody likes austerity. Nobody likes fast. Everybody likes Santa Claus, Christmas and Carnival. But we have had too much of that, and there has been too much boosting of growth by consumption.
Okay, but let's have a look at Greece. There we have austerity, and we have a result that everybody knows today, which is a catastrophe. People, unemployment is just rising every day. Mr. Droutsas, do you agree?
I think in theory what the professor says might be valid, but as you mentioned, Greece is, I think, the perfect example how it looks in reality. Don't misunderstand me. I think certain measures of austerity, or to use better the expression used by Yorgo Chatzimarkakis, fiscal discipline, it is necessary. But the question is to what extent. Fiscal discipline is necessary when you cut government spending where you don't need it. It is wrong when you start cutting salaries, pensions and things like that, what happened in Greece. So I think Greece is the perfect example where we saw that the extent to which austerity measures in one side, only cutting salaries, pensions and so on and so forth, was the wrong thing to do.
Okay, just so if you don't agree, just intervene directly. Yeah, it's a debate. It's not listening to each other directly. So, but on the other side, it was made very clear on the German side what austerity should be. So there's no mix.
Let me make one thing clear. In German, they talk about Sparpolitik, which is making economy, don't spending too much. It's a very positive idea, Sparpolitik. And that's the German version of austerity, which has a negative connotation. So we have first of all to understand that in the political debate, the Germans were talking about, for them, a positive thing. In Greek ears, litotita is the Greek word, is very bad. And I think in Portuguese as well. So politicians, of course, also live in their language. And that makes, first of all, a big difference. The second thing is that in the Greek example, it might, in theory, have been the right start to say, the Greeks have a problem. We have to reduce expenditure by the state. And then it didn't work. It didn't work because the negotiations between the Troika and the Greek government ended up in not fulfilling what was put on the table before. And then the Troika started to cut, to do exactly what Dimitris Drutsas just said, to cut pensions, to cut salaries, and then it didn't hurt so much the state, but the poor people outside there. So if we really want to see how to do it in a wrong manner, we have to look at the Troika on Greece. That was wrong. The Troika knows that in between.
So you mean cut? No?
No, the thing is that when we are talking about cutting public expenses, the bad public expenses, both in Greece or in Portugal, because it's not working in Portugal as well. I'm sorry to inform you, but it's not working at all.
So it is working.
No, it is not working.
The imbalances are being redressed.
But you know why the imbalances are impressed? Do you know why?
Well,
because Portuguese families are forced to sell their gold. The gold they have in the families in order to survive. Yes, that's true. Let's try to look to the data. But just to conclude, sorry. But there's one idea, which is that in Portugal, in Greece, and in other countries, there were a lot of things to cut at level of public expenses. But these dimensions that everyone refers to were never touched, and they are not so big. What is being touched is health, education, and then we are touching again and again what should be the role of the social state.
But there seems to be a beginning. Professor Colino says competitiveness is back.
No, it
so what does it mean?
It is.
Well, how it is back if you
exports
are based in a wrong. It's just a very short period where people still have gold to sell and things like that. Really, is not the contrary. It's not the contrary. And this is also because there was a huge decrease, that is true, about internal consumption, because people are poor. They don't have money to buy. And I don't know how does it come that is a good thing that there's no money into the real economy because people cannot buy. I don't know how it is a good dimension.
No,
if you ask
it's not consumption that is going to drive an economy.
No.
Alan Greenspan has been trying to convince us of that, and it worked in the United States for 20 years, and the United States has bankrupted itself and has bankrupted the world. Because each time the economy was dropping, consumption was boosted by too low interest rates, which created a real estate bubble. And at the end, you cannot boost consumption anymore, even with zero interest rates. And it doesn't work anymore.
Sorry to say, what we need is production.
Exactly.
Okay.
Exactly.
So what did the Troika do in countries like Portugal and especially Greece? They put a lot of more taxes on people. So they cut salaries and pensions, and the tax was put up to an astronomical dimension.
Every country.
No.
Every country
you know what
should
happened?
decide.
Sorry, Mr. Professor.
Can you give us an example?
Yeah, a lot of examples. If you have to pay for starting a business much more than before, there are no exceptions made for somebody who starts a business. Who on earth would come to a country where the political environment is not stable and there are hell of a lot of taxes to be paid? Nobody invested. That is why, of course, consumption went down, more competitive, but no production was started. So, in theory, it might be fine. But in fact, what happened is we just wanted to get much money out of the country by more taxes and by less expenditure. This doesn't work there. I agree absolutely with you. If you don't do it in theory first and then also in practice with a doable, a feasible plan and schedule, it won't work. And it was not a doable and feasible schedule. People are really dying in Greece. The ministers can report on that.
Sorry, Greece is a special case, and Greece had to be treated as a special case.
But it is as a general level. If I may just
works in Spain, it works in Italy. Greece is a special case.
Just
okay, Mr. Dursa, and then I have to
one sentence on this, and please don't misunderstand, Professor. This is not criticizing you or attacking you on that, but I think you make one basic mistake that unfortunately we all in Europe have been doing in the past 2-3 years since the outbreak of the crisis. We are looking at numbers, competitivity, and so on and so forth. Numbers are okay, but never forget there are lives, families behind those numbers. And this is what we all have forgotten in Europe. And we have to wake up and to see what is at stake, that the future of a whole nation in Greece, the future also of other EU countries and the people is at stake.
But let's go back to the social policy, but also then to the solutions. So solutions were also made, as you said, to cut salaries. I wanted to invite the unions here at this table, didn't have the time to be with us today, so I tried to meet them yesterday. I had an interview with Anne de Moulin, she's the head of a Belgian union. Let's listen to her for a minute.
Il faut arrêter de considérer que les salaires sont une variable, la seule variable, malheureusement, d'ajustement à l'heure actuelle. Quand on voit le défi auquel on est confronté au niveau européen, ce ne sont pas les salaires qui posent problème. Les salaires restent le moteur de l'économie et quand on voit les pays où les salaires ont été mis sous pression, eh bien, ça a mené vraiment vers une perte de confiance des consommateurs avec une récession économique dans la plupart des cas.
Salary moderation didn't change anything. Do you agree with it? Or
Yes.
Not a problem of salary.
Well,
yeah, but what is
just let's take an example of the Greek environment. Many Greek investors left the country and went to Bulgaria, because Bulgaria now is a member of the European Union. Bulgaria has much lower salaries, so in fact, low salaries, of course, can be a factor of competitiveness. Yes, they can.
Yeah,
but
it's a minor.
It's minor.
Absolutely.
But if you have listened to what the Troika said, maybe you remember when the Troika was, for the first time, after 2 years, they came to the Parliament and reported to the Parliament about their wrongdoings. What they said is, well, we should have inflation now in countries like Greece, Portugal, so they should undervalue their currency. They can't, so we need to have an internal devaluation, which is lower salary. So it's pure theory.
Yeah,
it might work in 10 years' time. How many victims we as politicians are able to digest in this time? That's
Professor,
why
Look, but that's the whole problem of an unfinished European Union. Because, of course, the case of Greece is dramatic and the wrong measures have been applied in Greece. I totally agree with that. They have, first of all, been applied by the Greek government. We shouldn't charge the Troika or the European Commission with everything.
You will allow me here, out of my personal experiences, having been member of the Greek government when we started, when the crisis started, believe me, when you are a country that is facing bankruptcy and your EU partners in the beginning are not willing to understand the situation and they are obliging you to do things you do not believe in, this was not because the Greek government wanted to do that. This was imposed by our EU partners through the Troika.
I defended the idea for years that the Greek debt should be restructured and that there were other ways to go about it. But Greece was a specific problem, and in Greece also you do not have, unfortunately, the industrial basis which can start a new dynamic in production again. That is one thing. But when we talk about the measures that have to be taken for the other Southern European countries, well, there you have a production basis, and at the moment it is working.
Things are,
and we need a number of years now to see how these measures
What
are
means a
going.
number of years, and there's not a possibility to develop, because you said at the beginning it will not be a piece of cake. It will take a bit longer.
Exactly.
What means longer? Yesterday there was a press conference of the British government announcing that it's going on until 2017,
Absolutely.
2018.
Well,
this will be 10 years of crisis.
Well,
how long will it go on?
Many years.
Yeah.
We have been in an euphoria where we have been boosting consumption by encouraging people to borrow and to consume based on a wrong model.
But that was
And we
political
now have to
choice as well.
deleverage. And unfortunately, many people have to deleverage and many countries have to deleverage. Unfortunately, there is a legacy there which should be treated, and for some countries it is particularly hard. And I think for those countries, special measures have to be considered. Greece, Portugal, Ireland, certainly. For other countries, it is other type of measure. France needs to reform, and it is not doing it, and it is a pity that it's taking so long. But it is other type of measures that are needed in France than those that are needed in Greece or in Belgium, for that matter.
The British magazine The Economist had a title quite a long time ago already: France will be the next Greece. Do you agree with it?
I think France has a big problem. If you look at the trade balance, France is in deficit and even growing. If it doesn't reform very seriously, France is going to have very deep problems.
We are talking all the time about lack of competitiveness. I agree. But there's also another evil that we don't talk about. That's the quite aggressive export strategy of some Europeans. Now, if there is a deficit in Greece, Portugal, Spain, France, there must be a surplus in other countries.
Sure.
Now, how do we have come to this surplus, to this enormous surplus? I mean, Germany, and I know it very well, has won out of the crisis, not only by trading, but also by having low interest rates on their bonds, 80 billion of euro in 3 years. 80 billion. So it's a win situation for Germany. Now, what can we do?
I just want to interrupt you for 30 seconds and like to listen to the European trade unions. I went to see yesterday. They have a message for you.
About that.
Yeah, let's listen.
Pour corriger cette fausse route, il faut beaucoup plus de solidarité en Europe, beaucoup plus d'investissement en commun. Ça veut dire que les États qui ont plus de moyens, comme l'Allemagne et les autres pays, devraient investir, mettre beaucoup plus d'argent dans les projets communs, d'intérêt commun pour les Européens.
I absolutely agree. I absolutely agree. And the message is that it's an evil to be aggressively present on all markets and not allowing local producers, like the cucumber producers in Crete, to get their own products into the shelves of the market, because there are Moroccan cucumbers. They come via Germany into Greece. This is not in order. This is not okay. So we have to have a change also in our common market strategy. And that is why Germans, Dutch, Finns have to understand we need now to invest in these countries to build up productivity. We all benefit from it as Europeans, but we cannot dismiss this, we have a deficit, we are proud of it. I can't listen to that anymore. That Germans tell me, well, our products are the best, so what's wrong?
We have a surplus, you mean.
What's wrong is that you can't, for eternity, beggar thy neighbor. It's called in the economic theory, beggar thy neighbor policy. You can't do that more than 20, 30 years.
Okay.
I just want to say that in order to be clear, I totally agree with what has been said. I think that we will learn with a huge difficulty that selfishness will cost much more to the European citizens and to the European taxpayers than it would cost the solidarity, and then citizens will pay for it and they will recognize too late, that's a problem. But I want to say that I agree with you. I think that when we have, in some point, but then I don't agree in the outcome, when we have this obsession with the deficit and the debt, and we don't see that the main problem is in the balance trades, that's where is the problem. Where I don't agree with you is that when we say that these measures are having a result in countries like Portugal or whatever, because if you make a detailed analysis, I don't want to have any kind of misunderstanding. Because if you make a detailed analysis about the reasons why you have, again, this surplus, You see, that's for a short time, and it will not be sustainable. The problems were not solved, and I think they will be even deeper than they are now. That's the issue. But I totally agree with you. And of course, we need solidarity and not this competition amongst
let's go to solidarity and competition. It's clear during the last years, many instruments, many tools have been put in place to solve the problem of the crisis. It still doesn't work. Some people say the Eurozone is now on the safe side. That's what they think. Okay, let's say it like this, maybe. But on the other side, competitiveness continues. Talking about taxation, for example. We had this month, we can see that in Belgium, for example, the Belgian airlines have problems. And they, of course, look to islands. Is taxation competitiveness something that should continue in Europe? How would you like to change it? Is it possible to change it? Is this the solution?
I think if there's political will, it is possible to change, of course. It's a question of political will.
Is there a political will?
I don't feel that. No, that's the problem. But because we are touching in a lot of domains, but we don't touch in the most difficult ones. In fact, they would be very easy. But when you look, for instance, for countries where you have, if you look to the stock market in Portugal, you see that CVINT, which is the index of the of the Portuguese stock market, you see that 19 of the 20 biggest companies which are in these, they are only 20, and 19 have their headquarters in Holland. They don't pay the taxes in Portugal because of the tax competition. So, of course, we need to do something there. We need to do it. And this would be a simple measure, but would, I think, help a lot in terms of bringing more equality and to define what we mean by competition, if we would not have tax competition amongst the different countries.
You wanted to add something?
Just to say, I think it would be a very, very useful and valuable measure, but I'm afraid that in political terms we are very far away from that, because we all see that national interests have become, again, much more important for all the member states. And you see this in the several debates also on the new budget for the European Union. Again, we can't move because every country is putting its own interest into the front. We see, for instance, also with the issue of the decisions of the Eurogroup finance ministers last week on Greece. Again, just patchwork, not a convincing final solution. Why? Because national interests, political national interests, the next elections, for instance, in Germany, are too much in the forefront. I think we have to convince our public opinions much more again, especially, allow me to say, in the Northern European countries, EU member states. It is much more about just helping out Greece, Portugal or other member states. It is about Europe. If we do not stick together, Europe will fall apart, and we have to avoid this.
There's good news. We all know that we need economic governance now. That's a buzzword that was a devil for many politicians some 5 years ago, some 3 years ago, but now even the Germans understand, and even the CDU, so the conservative government understands, we need economic governance. It's an old French concept. And that is, I think, the right source for these measures. Maybe we don't have the same tax system everywhere.
It is not included.
So you say, but this is an interesting news. Germany understands that there is a need for economic governance, and they will be able to split it, to give it to someone else, because...
Absolutely, and the Chancellor, Mrs. Merkel, was visiting the Parliament on her way from Berlin to London, visiting Mr. Cameron. She made a stopover here, and she addressed us. She took her time, and she... I would say she showed us the secrets for the next December summit. She will propose a budget for the Eurozone, and this budget won't be 1% of the GDP of the European Union. It will be more, 4 to 5%. You need a budget in order to run a currency. And this, of course, implies more money for projects, solidarity projects. And she said, on the same time, it's discipline. We are in solidarity, but also we are looking for discipline. So we are watching what the others are doing, but we are also watched as Germans. So
but you still see Germany as a driving force in this?
You can't run the European Union without this big country in the center. It is a driving force. And fortunately, Mrs. Merkel changed her strategy and wants to be something like the mother of the European Eurozone. Hopefully it will run
I
fine.
hope she will not again be coming 15 minutes too late.
Okay, so thanks a lot. Well, running out of time, I'm sorry, we'll have to stop here. We had a question, clearly. The question was not that easy, and we've seen it indeed. It's not that easy to solve it. It's maybe a bit of both, maybe a bit more growth to come out, to go out of this situation. So thanks to all my guests. Thank you for watching, and goodbye.